And I'm on. So it was that fast. Welcome to the show. Welcome to the webinar today. Thank you for coming. It's good to have you. If you have questions, feel free to ask them. There's a bit of a questions box that you can click on, and it'll allow you to send us a question. If you're in GoToWebinar, if you're in YouTube, just chat them. That's all you have to do. Just chat them. I'll make sure Vince sees them and Vince gets them. So welcome. Welcome to the event. My name is Jeff. It is good to see you. I hope you are doing well. I hope you're having a fabulous day. If you are watching us on YouTube and you like the event today, make sure to like and subscribe. It helps a great deal. I am going to start us off today by reading a legal disclaimer and then introducing you to my very good friend Vince. So let's go ahead and do exactly that. Oops, I'm in drawing mode. How do I turn that off? Okay, there we go. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or as a solicitation to buy a security. So there you go. I hope you guys are all doing well. I do want to say thank you for joining us today. Today we do have a very special presentation from our very good friend of Metastock. I won't say our very own Vince Vora, a very good friend of Metastock, Vince Vora. Vince has been a partner of Metastock for a long time now, number of years. And he's written one of our most successful add-ons to date, the Vora Victory 2. Actually, the Vora Victory. And then we also kind of had an update with the Vora Victory 2. He's going to talk a little bit about a simplified method for finding good trades. The thing I like about Vince, very straightforward, very easy to understand, and well, let's go ahead and just get him started. Vince, how you doing today?
I'm great, Jeff. How are you?
I'm great, too.
Excellent.
Just realizing that I need to figure out how to give you control of the screen.
I've got a button on my side to share my screen. I can try that.
Let's give that a go, yeah.
All right. Let's have a look here. Should be this one. You should be seeing a slide saying Trading Wins Victory 2.0.
Yeah, I can see it. It looks good to me. I'm going to go ahead and turn off my camera, and
Okay.
I'm here if you need me. It's your turn.
Okay, great. Thanks. And a big thank you to Jeff and the team at Metastock. As I said, they have been great partners of ours for many, many years, and I always appreciate an invite to these events. So thank you, Jeff and team. Everybody else, welcome. I'm glad to be here with you today. I would like to demonstrate for you a system that I designed many years ago, just before the COVID pandemic, actually. And we've been using it ever since very successfully. So that is our Victory 2.0 strategy, and I hope to share that with you. As Jeff said, my name is Vince Vora. I'm the head trader here at Trading Wins. I've been doing this for an awfully long time, and throughout that time, I've designed several different systems. This is our latest, and I've also coached and managed and so on. It's been quite the ride, but a very enjoyable one. I have a huge passion for the markets, and I love talking about them. So I'm looking forward to the next hour with you. Please do remember that trading can be risky, but only if you don't know what you're doing, and that's what we're here to help you with. I'm going to say, please don't start trading with real money until you're completely comfortable with the system you're using. Again, markets trading in general can be risky, but what we do here at Trading Wins is we try to eliminate as much of that risk as we can, and that's where Victory 2.0 comes in. So let me exit here and go to my Metastock platform, and what you're seeing on your screen right now is the Victory 2.0 add-on. This is a chart of the SPY, which is the ETF for the S&P 500 on a monthly time frame. Now, before I explain exactly what all these different colors and symbols are on your screen. I will say that this system is strictly based on technicals. There is no fundamental data that's included in this or involved in this. Having said that, it's always a good idea to marry technical analysis with fundamental analysis. So if you're using fundamental analysis or like to, you can certainly combine it with a Victory. But being strictly a technical analysis tool, Victory 2.0 can be used on any market. Equities, futures, forex, crypto, you name it, anything at all, options, and also on any time frame. You can use it on a 1 minute chart, 3 minute, 5 minute, a daily, weekly, monthly. It really doesn't matter. And you can also use this to trade on any exchange around the world. Being a system based on technical analysis, basically anything you can chart, you can use Victory for. So today, I hope to show you examples from different markets, different time frames, and so on. Now, I'd like this presentation to be as interactive as possible. So please, if there's a symbol or anything that you want to see a chart on, just type it into the chat, and I'll review that for you and show you how Victory would have done. I'm also going to show you a number of the recent trades that we've been looking at Trading Winds, as well as some new ones. So if you stick around closer to the end, I'm going to give you a few of the most recent trade ideas that are popping up on the screen here. Okay, now let's have a look at what Victory 2.0 is and what all these different colors and symbols mean. Now we have a couple of different types of arrows. You'll notice that we have these bigger, darker arrows, and then these smaller, lighter arrows. Now both signify either a good time to go long in the market or a time to go short. Now, before I go any further, I will say that the intent here is not to take every single symbol that you see. We have a strict set of rules that goes along with this add-on, and we only want you to take the ones that match our rules. And we have an 8-point checklist, which I'm going to share with you as we go through this presentation. Okay, but the arrows are telling you it's either time to go short or it's time to go long. Now, the difference is the smaller, lighter ones are an initial long. If you see a thicker, bigger green arrow, and you'll always know because you can just hover over it and it'll highlight what they are. But if you see one that says HPB, that's a high probability buy. Okay. You may also see these green and red dots. What these are what we call a long reentry or a short reentry, meaning since we're already in a trade, the same algorithm that highlighted this has come together again to say it's another great time to get in this trade. But since we're already in a trade, we like to display it a little differently. So if you miss this one, you can now take that one, or if you find another one that's actually a higher probability buy, you can also take that one. Now, the difference between the regular long and the high probability is there's a couple of other layers in the algorithm here that have been met. We have a couple of additional confirming indicators behind there that have to line up properly. But having said that, once you find a signal, long or short, and whether it's the original longs or the high probabilities, whatever, as long as they meet that 8-point checklist I'm going to give you, they're all considered very, very good trade ideas. Now, you will from time to time see an exit flag. That's kind of obvious what that means, but sometimes you'll see the system just go from a green to a red without an exit flag. Again, it doesn't mean you're going to go from long to short, but you certainly would want to exit that position. Now, we've tried to make this as clear as possible for you. So one of the nice features here is that once we get into a trade, for example, this long trade, every single bar or candlestick, whatever you prefer to use, will be colored the same, will be colored green until there's something that has changed with the algorithm. Okay. So the idea here is that you can enter if you see a subsequent entry, either a long re-entry or a high probability. You can either add to that position, or if you missed the first one, take it from there. But regardless what you see along the way, if there is a change in color, that is telling you to exit that position fully. Okay. Uh, Along with this add-on, you'll receive a training class to tell you exactly how we trade this in much more detail than what we can go through in an hour here. But so during that training, one of the things we'll teach you is how to scale out of positions. In other words, how to take some profits along the way. Okay. Now, there's an additional feature here where you can add on take profit levels. Okay. I like to keep my chart clear, make it nice and simple for myself. But if you're interested in that, we can also, you can also from the settings add that to your chart, some take profit levels. But the point I was trying to make is if you see a change in color, you need to exit the full position. That is how we keep losses small. And that's really what's going to determine whether you're successful at trading or not. If you keep your losses small while allowing your winners to run, that's the difference. In the long run, what you want is more winners than losers, obviously, but obviously bigger winners than your losers. And one of the things you'll notice about victory, one of the things that it does really well is it keeps losses small. So in other words, if you were to get in here and immediately the market starts going against you, it will change color. It will get you out of there immediately, so that most losses are very small compared to the winners. Okay. And then you'll see this blue line. If I hover over it, you'll see it is a simple moving average with a period of 20, okay, based on the close. So a 20 period simple moving average. And we don't use this for crosses or anything like that. What we use this for is to judge the amount of momentum behind this move. Okay. So what you want to see with that blue line is if you're trading to the long side, you want to see that line sloping higher. And the higher the degree of slope, the better. That means more momentum behind it. So if you look at the momentum over here, right, it is sloping higher, but barely, compared to, say, something like this, right? So one of the things that we're going to focus on in the training sessions is how do you compare one setup to another? On any given night, there'll be multiple setups. And one of our core money management rules is to be very selective with our trades, to pick one or two of the highest probability trades on any given day. And so you want to spread your trades out and just pick the best of the best. So how do you do that? Well, one of those criteria that we look at is the slope. So for example, if you were comparing this trade to this trade, you'd select this one based on the slope. There's much more momentum behind that. It's like having the wind at the back of the bars, the daily bars here. Okay, so we use the 20 period simple moving average to judge momentum. And obviously, if you're trading to the downside, you want this sloping lower. Okay. And finally, we have these two bars down here. Now, what this is, and I'm going to switch to a daily chart here to show you. What these are down here are two higher time frames. So in other words, what I like to do is if I'm going to be long the SPY here, I want to confirm that both the two higher time frames, the weekly and the monthly, are in line with what I'm seeing here. So what these represent here are the colors of the bars based on the victory setup on the different time frames. So on the daily, we can see we have green bars this is telling us it's a good time to stay long. If the weekly's green and the monthly's green, it means we have a trend upward on all three time frames, and that is the safest environment to trade in. That's how we put the odds in our favor. If we have a bit of a mixed picture, meaning, like for example, this long trade here. Okay, not only did we not have slope on the 20, which is a negative, but we had the weekly time frame still in red and the monthly was in yellow. Yellow means neutral. I mean, if you ever see a yellow bars here, it means you should not be long or short. Okay, you want to be out of the market at that time. All right. So that in a nutshell is the victory system. Now, the important thing here are the rules. Which one of these we want to take, which I'm going to go over in just a moment. Before that, I want to show you one other thing here. There is a feature here, and I should tell you how to get there. If you right click anywhere on your chart and go to apply template, now you're going to have to go near the bottom because they're in alphabetical order, and mine are all the Vora ones here. There is the Vora market overview multi-time frame. Okay. That's the template you would want to bring up. Now, if you're trading in Australia, we have the ASX market. If you're trading in India, we have the Nifty market. And we can add others if you're trading in other markets. But for the US markets, it's just the Vora market overview here. And what that will do for you is bring up this, okay? And what you're seeing here are a series of ETFs. ETF for the Dow Jones, the S&P 500, the Nasdaq 100, and the Russell 2000. So the four major indices, right? Equity indices. And then below there are the major sectors like communications, consumer staples, energy, etc. Okay? And again, these colors represent Victory 2.0. So, what we're looking for here is, for example, if you look at the far right here, it's mostly green, okay? Now, this snapshot was taken a few weeks ago. The only reason why I'm not loading this live right now is since we're bringing in all of this data for multiple time frames. One is the daily, one is the weekly, and you can change those time frames, by the way. But it's going to be slow to load, okay? And since we're live, I don't want to waste the time on it. You'll have to wait a couple minutes for this to load. But what this is doing for you, it's giving you a snapshot of what the markets are doing in the different sectors. So if you see a lot of red at that time, straight down the page, that means we're trending lower pretty much across the board, right? All different sectors and so on. Now, if you're mostly green, it means we're in a strong uptrend. So it's a quick, easy picture to see what's happening overall. But another benefit is that usually there's one or two sectors that sort of do their own thing or go in the opposite direction of the market. So for example, if you look down in this period back here in Q1 of 2021, there's a lot of red, but look at energy. Energy was green and consumer staples were green. So what I like to do is, for example, if we're in a strong bull market, I like to have most of my positions to the long side, but I always like to have a couple short. That way, if we have days like today where the market pulls back, those shorts will absorb some of the losses on the long side. So it's a bit of a hedge, and you know exactly which area of the market to look for a hedge. Okay, just another little helpful tool for you there. So let's get into the rules, and then we will get into some symbols. I could see that there's already people asking for gold and silver. We'll absolutely look at those as we go through this. And in fact, why don't we just bring them up and use those as examples here? Yeah? So let's look at that. So let's look at gold. All right. And now I'm going to look at it here on a daily time frame to begin with. All right. But again, we can look at this on a 1 minute, a 3 minute, a weekly, monthly. It doesn't really matter. Okay. And I'm so happy that you asked for this. There's a lot of great things I can point out on this chart. But let's start with the most recent trade on gold, which was here, which was actually a high probability setup after a breakout out of this channel. Now, I'm going to bring up this 8-point checklist, and I know that this event is being recorded, and you'll get a recording later. So you can just pause it and write these down if you want. But I'm going to go over them very quickly. Basically, the chart has to be clean. What do I mean by that? I mean nice, orderly price action. When I go back to the chart, I'll explain that a little more. The reason for the entry is the victory method. So you're looking for one of those arrows or those dots. That's there, obviously. The slope on the 20 should be significant and should be in the direction of the trade. I think we have that on that trade. The distance from the 20 SMA should be minimal. Where the bar closes, meaning the top half of the bar for longs, bottom half for shorts. Support resistance, either above you or below you, should be minimal. And the higher time frame should be in line with whatever time frame you're trading. That's where those ribbons at the bottom of your chart come in. And lastly, the earnings date. If you're trading single stocks, you have to check the earnings date that's coming up. Earnings can cause a gap in any direction, and I like to stay away from those. But if you're trading something like gold or an ETF like GLD, for example, they won't have earnings date. You don't have to worry about it. So again, going back to those 8 points, right? Is the chart clean? So this chart is very clean. It's very orderly. How do I know that? How can I tell? Well, when something is trending strongly and is very liquid, okay, it's being traded heavily, the bars, whether they're 5-minute bars, hourly bars, daily bars, they're all more or less the same size, okay? See how throughout this stretch, they're all very similar in size. And then when volatility hits, that's when they start going a little crazy and you start seeing big bars back and forth all over the place. So now, the last week or so, we've had a pretty good spike in volatility on gold. All right, now we're hoping that we get another reason to enter here and continue this trend. But you can just look at a chart, go back, look at a chart, and you see how here they're big, small, and especially through channels. Which, by the way, you want to avoid these. Any arrow that you see during a channel, a move sideways, you want to ignore. Okay, this is where traders lose all their money. Because you would get in, get stopped out, go long, get stopped out, go short, get stopped out, etc. And the market just keeps taking your money. Okay, so one of the rules that we have, remember, is that the 20 needs to be sloping. Well, in here, not much slope, is there? It's more or less flat. That's how one of the ways we avoid trading in here compared to here. Look at this trade. So this chart is clean. We have a reason to enter. We have the victory signal, right? The bar is close to the 20. When it moves away from the moving average, it tends to snap back. So the last thing we want to do is if we get an arrow out here away from the moving average, we don't want to enter that because we risk it snapping back on us and taking a bigger risk. That's what it means. We're taking a bigger risk. We don't like risk. We want to avoid risk. So we want the bar to be close to the 20. We also want that bar to close, near the high of that day or that 5-minute period, whatever that bar represents. The reason for that is generally when you finish in the top half or the top quarter, the likelihood of following through in that direction is much higher. So again, what we're trying to do here is stack the odds in our favor. Okay, we're trying to find the high probability trades, and that 8-point checklist is going to help you do exactly that. So we've got significant slope higher, which means we've got momentum to the upside, right? We have a reason to enter. The algorithm's telling us this is a great time. We have a bar close. It's closing in at the top of the bar. And remember, one of the things I said is we want little to no overhead resistance in this case, since we're trading higher, right? How do we know? We look to our left. If there's nothing but blank space, okay? And so if you're breaking out to an all-time high, for example, that's the absolute best case scenario. But if there's no previous activity there, then we have room to move. If we go back and there was a ton of activity, so if we were trying to enter a trade here and just overhead there was all of this activity, the chance of that stock trading through that level is much less. So we want a nice clean road ahead. Okay. And basically, this is how we do this. So you wait for that bar to close, and then if you get a trade 1 tick or 1 penny above that the high of that day, that's when you enter, and then you simply follow the trade. Just look at the candles, and as long as they're green, right, you can stay in it. Now, we'll teach you where to take some profits along the way, but remember, any change in color, you exit completely. Okay. And so, same thing goes for this trade here recently, right? It met all 8 points. Oh, the other thing I forgot to cover was the ribbon, right? So, we want to make sure that the higher time frames are aligned. In this case, they were. And so, we're free to take that trade. And boy, did it work out nicely. Okay. And we're still in that trade here. Again, these channels you want to avoid as much as you can, but you do want to keep an eye on them. They present a huge opportunity. So most traders get very frustrated when they see a market in a channel like this going sideways. We call it consolidation, right? It's consolidating. Because who knows how long this can continue on for? But the reason why you should be excited rather than frustrated is because the longer this channel lasts, the bigger the move will come when it breaks out, whether it's to the upside or the downside. Now, remember, it's always better to break out in the direction where there's no prior activity. So in this case, the breakout up here was ideal. It broke out to fresh new all-time highs. There's absolutely nothing in the way, and off you go. Now, throughout here, that 8-point checklist will keep you out of these. Either usually it's due to the flat 20, okay, which doesn't allow us to take the trade. The other thing is the messy price action, which will keep you out, okay. But once it breaks, you're either free to take that at that point if the 20 is sloping, if the higher time frames are aligned, everything has to be aligned, or you just simply wait for another opportunity like here, and off you go. Makes it nice and easy. But the other tip I'll give you, and the reason why this second line is drawn here, is if once you get that breakout, if you measure the channel from start to finish, you can expect a move in the direction of the breakout, a similar size move. So if you look at this and we plot another line here, it's pretty much identical, isn't it? Right? And a lot of times you'll find a similar move just before it. So we had a similar size move. Now we get a similar consolidation, and now we get another similar move. It happens over and over and over again. All right. Let's have a look. So GLD, whether we're trading spot gold or the futures contract or the ETF, it doesn't really matter. It's going to look exactly the same, more or less, right? So we can look at silver, and I'll use SLV, the ETF for it. It'll be the same thing. All right. And silver's had quite the move recently as well. And again, what we're looking for are those nice, easy, clean trades where you have a lot of slope, a lot of momentum in your favor here. Okay. You get a nice setup. There is nothing but blank space to your left. The ribbons match. All right. And the price bars are all similar in size. It's been trending strongly. It's just a nice, easy trade to take and a nice, easy trade to stay in. Okay. Again, you'd likely be taking some profits along the way, but you get a change in color and you're out of there completely. Not part of the position, despite what you might think gold is doing, and what we'll do longer term, you'll always get an opportunity to get back in if there's another move higher. So I would suggest you exit completely. Okay. Um, Now, let me show you a few others. For example, is there anyone here who's into trading crypto, Bitcoin, Ethereum, etc.? Okay, it's no different. It trades the exact same way. Now, certainly, it's been more volatile. You can see the messiness. So generally, this is a chart that I would stay away from if it was a single stock, right? Otherwise, you wait for that proper time to trade it. So throughout here, right, it was nothing but a flat 20. It keeps you out of all these potential trades. Then comes this one, right? Now you have some slope, right? You have green ribbon. The reason why the monthly isn't colored here on Bitcoin is there isn't enough data going back, enough months for the algorithm to calculate. That's all. But the weekly is enough, and and it is green. You look to your left, and there's nothing but blank space. Right, the bar is near the 20, and like it meets all the criteria, and that's why you'd want to take that trade, and off you go. And again, you can look at whatever time frame you want. Go back on these charts and look at it. As I flip through more and more charts, you'll be able to spot them very easily. All right, that the trades you should be taking versus shouldn't. It's just a matter of training your eyes, and it'll happen very, very quickly. Um, Let me see if there's any other symbols. If anyone else wants to see anything. So Elio says, does this work better for indices and ETFs, or can it be? I don't see the full question here. Let me see if I don't know how to extend that out. The answer is there isn't a specific market that it works better on than others. It's based on technical analysis, so it really works just as well across the board on anything. I'll even show you, for example, let's go to the Nifty 50 in India, right? It's going to work the exact same way. It doesn't matter. They're just technicals. It's a mathematical formula that's behind this. So when you get these strong moves, it will get you in there. And again, you just want to avoid the chop. That is about it. You can look at different country ETFs. This is Peru, for example. And just an incredible move recently. And this is what you're looking for. You're looking for strong trends. And look at this. There was a mini consolidation here, right? Didn't last long. We broke out, and now you take your trade. And this one lasted even longer than what you would expect. I mean, if you look at this move, right, it was similar to the consolidation. Then you get it. And then if we had gotten in here, that first little move before the first pullback was similar in size. And then it set up again and continued on. So we could have gotten in, added to it, added to it, added to it, exit, right? That's exactly what we're looking for here. We just repeat. Now, I will tell you that I've run across a lot of traders. I've been coaching for several years. And what a lot of traders really try to do, which I think is a waste of time, but if you want to do it, let me give you some tips. They try to call like the absolute bottom or the absolute top, right? Which I think grabbing the middle 60% of a move is really all you need. But if you want to try and grab the absolute start, here's a couple of the rules that you can use in addition to victory to help you do that. So look at this arrow here, right? It's telling us we should go long, but the 20 is flat, right? Pretty much like it was here, etc. So we're not out of that consolidation yet. So the risk is that we enter here and we get close to the top of the consolidation, and then we move back to the bottom end and keep just grinding sideways, right? So how do we know that this one might be better than this one or this one, etc.? And there's two things. One is if this bar had closed, not traded, but closed above a prior pivot high, which would have been here. Okay, this one does not qualify, but if it was a bigger bar and it had closed above here, that would be okay. The other thing is that it, what you can look for is a retest of the 20 period moving average, meaning if we had, for example, here we moved higher, right? And then we pulled back, but we went beyond the 20, and that's what disqualified it. But if we had hit the 20 and then bounced again here, all right, and that's when we got the arrow, then that's a successful retest. Okay, so that would work. And this one did not have either of those. So the other way we would trade it is on a break out of this channel. So if you get a close out of this, for example, right here, you could enter. Now, the way I do it is I would go in with half size. I wouldn't put a full order. I'd put a half order in, and then on that next pullback or the next victory signal, I'd add the other half. And that's exactly how we would trade this. And then, you could add more, etc., and go from there. So you can always do that with channels. Let me run through a few other stocks here that we have followed through and taken trades on recently. I'll try to monitor the questions as well. Energy Fuels. All right, just a fantastic move recently. And again, if you go through these setups here that have slope and meet all 8 points of criteria that we look for, you would be in on these trades out here, back in here, added here, still in it, and just done really, really well. And again, it works the same on the short side. I know I haven't shown you a lot on the short side. It's been a while since we've had some nice short positions. Again, look at this area in here, okay? You could mark that as a bit of a consolidation, right? Here, oops. Let me try to grab that drawing again here. So if you have an arrow, but it's within a chop zone that you don't want to take, but then price breaks out, what you want to check here is not necessarily that we get another signal, but that the 20 is sloping now. Up here wasn't much. Here now it is. And you want the ribbons to be same color, right? You also don't want much activity to your left again. You don't want a lot of support down here. You want room for this to run. And there it goes. And then you pull back. Now here you have slope, right? You have the red ribbons. Everything, you meet the criteria and off you go. Okay? And you're not going to make money on every trade. All right? There is no perfect system. Certainly this one isn't perfect. But if you follow that 8-point checklist, you should be winning the majority of your trades. And more importantly, your winners will be much bigger than your losers. Okay? Now remember, you're always susceptible to gaps. Okay? Especially if you're not paying attention to earnings. So any news can come out on a stock or just the market in general or anything can cause a gap. So obviously, even if we're in a strong trend like you see here, and there was some catastrophic event or some horrible news and the stock gapped and opened down here, obviously your loss could be big. So don't just pile in thinking that there's no risk here. There's always risk, but during those training classes, we're also going to give you my money management rules, and there's just only 5 of them. And if you follow those 5, I will guarantee, and yes, I say guarantee, and in this business you don't hear that a lot, But if you follow those 5 money management rules, you should never take a big loss again. Okay, it's not mathematically possible for you to take a big loss if you follow those rules. All right, we'll give you that during the training. Let's see, what else do we have? How is that green ribbon indicated? Let me see what the rest of the question was. Based on multiple time frames. Yes. So I'm glad you reminded me again. So here, since I usually trade on the daily time frame, this is set to weekly and monthly, the 2 higher time frames. We do have templates. As you can see here, there's a 30-minute template, there's a 5-minute template, there's an hourly template, and so on. All you have to do is right-click anywhere on your chart, apply template, and go find those. So if I'm a 5-minute trader, right, I'm going to select the 5-minute template, and what that will do is automatically plot the 15-minute here and the 30-minute, right, the 2 time frames above that. And so you'll have different templates to choose from there depending on the time frame that you're trading. Let's see what else. Are there any confirmations used by the victory indicator other than breakout on SMA? Well, there's a whole algorithm behind the scenes. I'm not going to reveal that here, but there's basically a series of things that have to line up properly in order for these symbols to populate. And it's mathematical, and again, has been very reliable. Okay, Greg wants to see SHOO and Intel. Let's have a look at those. All right, so Steve Madden here. Let's see how those would have done. And in a second, I'm going to show you a couple of other parts to this indicator before we sign off. So have a look at Steve Madden here. Boy, oh boy, was it ever trending strongly to the downside, wasn't it? Now, have a look at this trade, because we could look at these trades and say, well, you know, it was sloping lower and it looked like there was empty space down here and so on, but the ribbons did not align, not all 3. So does that mean you can't take this trade? No, of course you can take whatever trade you want, but what it means is the odds are not entirely in your favor, right? It carries more risk. For the simple fact that the monthly is still trending higher, not lower at this point, right? So when you carry on and then both align here, that next trade here meets all the criteria, right? Not only do we have a victory set up here, the bar is very close to the 20. The close of that bar is close to those lows of the day. The slope is there. The higher time frames are aligned. There's absolutely nothing, no support here stopping this from going lower. And look at what happens. It just rips. It gets out. You get out here, and you get back in here for another flush. You get out here, and now you wait patiently until that next setup in here. So, and please, if you want to see this on different time frames, just let me know. We can go through this. It's the same thing. All right. Whether you're taking it on a weekly, a monthly, a daily, a 5-minute, it really doesn't matter. Okay. But if you are trading on the lower time frames, like a 5-minute, you want something that's liquid, something that's heavily traded. All right. Let's look at Intel here. Intel was sort of like the forgotten tech stock for a while, right? And I mean, it had been dropping sharply. Again, what you're looking for are these trades where you have significant slope in the direction of your trade, matching the higher time frames without much overhead resistance, and off you go. If you try this out and you just flip through chart after chart after chart and look at those eight points of criteria, you're going to see that the majority of them work out quite well. Let me see if there's any other stocks. Or again, let me just switch time frame just so you can see here. So if we go back, remember when Intel was Intel, leading up to the .com, this is what you had. So you would have caught the majority of that move, right? Now, this is a monthly time frame, and this is why we teach you how to scale out of positions for this reason. Now, this was a whole month, so this is when the market collapsed, the .com collapse, and in a month you retraced, a good portion of that move, right? If you're trading on a smaller time frame, it could also happen. It just happens less, but scaling out along the way is super important. That way you lock in a profit no matter what happens. So again, we'll teach you all of that. But these are the kind of trades that you're looking for consistently. All right. Let me see if there's any other signals or symbols here. I don't think so. Jeff, just interrupt me. If there are, I want to show you before I go and show you a couple of the other things. Let me show you a couple of trades setting up right now. So IBM, have a look at IBM here. IBM has really made a comeback, and right now, here we are. So there is a signal today on this where we certainly have slope, don't we? Here. The bar is right near the 20. It closed near the high of the day. Above here, I don't believe there's much at all. Let me check the weekly. Nope. And the monthly. So it looks like we're close to an all-time high, which is the ideal scenario, right? It's certainly trending higher on both the weekly and monthly. So the only thing here that the only reason I would not take this trade today is I believe the earnings announcement is in 8 days from now. I prefer to have them 10 days or longer, right? Since I trade off the daily time frame. I like to give the trade time to work out in my favor. So that's the only thing. But I wanted to show you this as an example. So you see a real life example of a trade setting up right now, right? There it is. And if you go and compare it to this trade, it's pretty much identical, right? When you look at the slope, right? You look at the how close you were to the previous all-time high. The ribbons were aligned, everything was there, and you had a real nice trade. So, as far as earnings goes, who knows which way, what can happen there, but so be it. Let's see. XOM now. ExxonMobil. Here's the reason why I chose this example is here. You have a setup, right? But why wouldn't you want to take this trade? I mean, just look at all this mess. Look at this back and forth. The reason why we say we want to trade clean charts that are trending strongly, is to avoid getting stopped out. In here, try to find a spot to buy where you don't get stopped out and lose money. It's typically pretty much everywhere, right? So if you have a chart like this, one thing I would recommend is draw a line across, the highs, where once you cross that point, you're in the clear, okay? And I don't know that we can say that on this one. Actually, pretty much. I mean, there's some activity overhead, but not a lot. And you can easily spot that by going directly to the monthly, right? And seeing the full picture here. So there we are. So that is, I believe, the all-time highs. So we're not far from there. We just need to get out of this mess that we're in right now. Okay. So this is something I would put on a watch list rather than trade right now. And once it cleared that mess and gave me another setup with slope on the 20, with the ribbons aligned, etc., then we're free to go. But don't just look at this and say, oh, we've got a green light, let's go for it. No, this is not reducing risk. This, you're trading with all the risk here, which is not what you want. All right. I'll show you one that we've traded along the way here to the short side that right now looks like, if you look at one time frame, it looks like it might be bottoming, but I see a slightly different picture. So Lululemon has been dropping consistently, and these have been some of the easiest trades to take along the way. But now we've got a bit of a consolidation, and we even have a long setup here on the daily. But look at the ribbons, they're both red, right? And now let me show you the monthly. And sorry, let me try this a different way. Let me show you the monthly, and you'll see a completely different picture here. So there it is. So what did we get? We got this huge move up, right? And what did we get in here? You know, that mess, that choppy mess, where if we were to draw a line, it'd be right here and say, okay, above here, we're in the clear, below here, we're in the clear, right? And look at what's been happening to it ever since. It's been a falling knife, right? Where's the next level of significant support? It's all the way down here, right? So we are likely to come down to the 80-ish area. We're still at 178 here. Got lots of room for this to drop. So what would I do? Well, I'd go back to the daily and I would just wait for this to give me another proper short sale with the 20 or the blue line sloping lower, these ribbons red, etc. And just be patient and wait for that next setup. Okay. Now, a couple of other nice little features here is if you go to the top left here to the view button and click on expert commentary. This is going to bring up a box where it tells you a bit about trading wins, myself, etc., and victory. But more importantly, it helps hold your hand through the life of the trade. So what you're going to notice is on the most recent candle, there's going to be a little triangle above it here. It always defaults there, but you can move that to any other bar, either by clicking above the bar or using these buttons here, okay, to toggle back and forth. Now, what this is going to do is it's going to input some text here in the same color as the signal. Okay, we try to keep everything consistent. So it's telling you it's currently signaling a long opportunity. All right, but it goes a step further. It also, if you're an options trader, it gives you an idea of the type of option that we would open here. Meaning the type, how far out of an expiry date do you want? What kind of delta? That sort of thing. And then, more importantly, as the trade develops and moves, it's going to give you a stop loss level. So let me go over this candle here when we were in this short, okay? And you'll see here that it's giving you a stop loss level. The reason for this is for those of you who can't watch or be in front of your screen while these trades develop, you have a full-time job or family, etc., and you have to leave your screen. You wouldn't know when it's going to change color, right? But at least temporarily, we give you a stop level that you can actually input a stop loss order on, so that if something crazy happens while you're away, you'll be taken out for a small loss. And with every new candle, every new move, that number changes here. So keep an eye on it. It's 234.40. It moves again. Now it's 234.19, etc. It trails it for you. So it's a nice little feature to have. In addition to that, one of the most helpful items is if you go to the top left and click on this P, which is to open the power console. On your left, go to the third tab, Explore. And this is the scanner. So up here are all the strategies that are programmed. Again, for mine, you'll have to go to the bottom, right, as it's alphabetical order. So you want to find the Vora Victory. Okay, now what you'll see is that there's Vora Victory, and then, for example, there's Vora Victory Filtered. Okay, the difference between the two is one will get you all of these arrows, all of the setups, regardless of whether it's in a consolidation mode or not. The filtered one will only give you the ones where the 20 is sloping. Okay, so it saves you some time. Now, you can right click on these and save it as a favorite, add to favorite, and that way, when you come back, instead of scrolling through all those, you only have your favorites here. Okay. And you can also search for the high probability ones or whatever you want. But you do that, you select your market. Okay. So for example, I'll take here the Dow 30, right? And then you come here and you select your time frame. So I like to trade on the daily, but you can select whatever time frame you like. Okay. And then you start the exploration. And that will, I won't do it now. We're pretty much at the end of the webinar here. But that'll give you a short list of stocks. And it'll also, you'll see columns on there where you'll be able to automatically tell whether the weekly and the monthly or those two higher time frames are aligned or not. So just from that short list, you'll be able to save yourself a ton of time. And then you can add it to a watch list, print it, or do whatever you want, or open the charts directly from there and find trade ideas. Okay. Again, this is something that is based solely on technical analysis. Will work on any market, any time frame, any exchange around the world. I suggest you grab a copy and try it out, and just go through chart after chart after chart. Don't put any money into it until you convince yourself that it's something that will be useful for you. I think we're out of time. Jeff, I'm going to pass it to you. If there's questions, I'm happy to stay to answer them. But if not,
Yeah, I've been answering a few, but we have a few that I kind of wanted to talk a little bit about.
Sure.
Satish has had a number of questions, and you've already answered most of them. But Satish says, I usually see multiple timeframes for confirmation of the trend. In shorter terms, does the green-red ribbon on weekly, monthly interpret the same thing?
You wouldn't want to use the weekly and monthly for a shorter time frame. So if you're using an intraday time frame like the 5-minute, right? You want to bring up the template here for the 5-minute chart here. So if you were to bring this template up here, you'll notice that you now get the 15-minute and the 30-minute. Okay, so if you're looking at a chart, say of Lululemon here, on a 5-minute chart, now you have the 15-minute and the 30-minute ribbons. Okay, so you can use whichever, the appropriate ribbons for the time frame. If you're trading off a 30-minute, you want to bring that template up. If you're trading on the hourly, you want to bring that up, and so on. We don't go any higher than weekly or monthly. So if you're trading on a weekly, you only want to look at the monthly. If you're trading on a daily, you want to look at weekly, monthly. But yeah, that's how I would do it.
Bob wants to know if this will work with option trades.
Absolutely. I mean, I almost exclusively trade options. The only time I buy a stock is whether I'm pairing it with an option or it's so inexpensive that it costs less than an option contract. So then I'll buy the stock. But absolutely. And on that note, if you were to try the add-on, you're also going to get a membership to our pro service. If I can just take a minute, Jeff, and tell them about that.
For sure, yeah.
I appreciate
it.
So the pro service is we send out nightly videos 5 times a week, every Sunday night to Thursday night, which is a brief recap of what happens in the markets and trades that we're watching. So you get that. But a bigger part of the membership is we actually get together live 3 times a week over Zoom for a minimum of an hour at a time. It usually goes closer to an hour and a half. We get together Mondays, Wednesdays, and Fridays. All right. Now, that's where you would bring your questions. So any technical, any trading related questions at all, you can bring there and get your answer there. But the whole point of those sessions is for us to look for trades and to share information. We have a group that is very experienced. I have members that have been with us for almost 10 years on that membership. We have people just starting out as well. It's totally fine. But we share ideas. We talk about the markets in general. It's a great forum We also have a Teams chat where we post stuff when we're not in those chats to share with the group. So it's a really great spot to get support, get your questions answered, share trading ideas. It's fantastic. So that's also included here. Um, uh, and I lost my train of thought now. I forgot the original question, which I thought
You were
would be
talking about
better.
how awesome the trading wind service is.
Yeah. So,
Bob, thank you for the question.
mhm.
I wants to know if you could show the 8-point checklist again.
Oh, absolutely. Here it is. So you want a clean chart, one that's very predictable. And give me 1 second. I want to show you a chart, an example of what I mean here, a perfect example of what I mean. If you look at the ETF XLC, which is the communications ETF, and you look at this on a weekly chart, for example, this is as clean as you're going to get. Okay. So this is what I mean. When you're trending strongly, the bars are very similar in size all the way through, but it's just very predictable. I mean, anyone, I don't care if you're just starting out and you know very little about trading, you can tell this is an uptrend. You can tell this is a downtrend. You can tell this is an uptrend. I mean, that's really all we want. And then Victory will tell you the precise areas to get in and where to exit. Okay. So you can see how it got you up near the top here, just before that decline. Now, this would not have been an actual entry though, right? You could have taken it, um, but you're taking on more risk. To eliminate that risk, you would wait till all the points are there, and these are them. In addition to the cleanliness, you have the victory arrow or the dot. That's great. The slope on the 20, super important. Super important. It's got to be sloping in the direction of the trade. You want that setup candle to be near the 20 SMA, not far away from it, near it. You also want that bar to close, for long setups in the top half of the bar, for short setups in the bottom half. You want minimal support or resistance. So if you're trained to the long side, you want very little overhead resistance. If you're trained to the short side, you want very little support there. And you want confirmation on those higher time frames, 2 higher time frames, which is what the ribbons will do for you. And for me, I like to stay away from earnings reports. They always are just about always gap one way or the other. Over my almost 4 decades of being in this business, have never been able to figure out a way to predict what the reaction is going to be after earnings. So I want no part of it. And so that's why I avoid gaps against me. So there it is.
All right. Elio has a question I think I should answer. She wants to know
Okay.
what the special is that we're offering and how to get
All right.
it. So I'm assuming Elio, a gender. Hopefully I was right. So
Yeah,
in any case, I'm going to go ahead and take over if that's okay. Vince, I want to
sure.
say thank you, though, for coming in and spending some time with us. Much
Thank you
appreciated.
again for the invite. It's always great working with you and the team. So thank you again. And thanks for everyone for sticking around and listening. Appreciate it.
Very cool. Thank you. Thank you very much, Vince. All right. Here's a nice picture of the box. There are a ton of stuff that's Vince has been working with us for so long, and we've done a lot of work together over the years. We were just talking about it right before the session, actually, about really kind of all of the work we've done and how long we've been kind of creating indicators and methods for him. I want to kind of talk a little bit about this. Has been one of our best-selling Metastock add-ons. It was our best-selling the year that we released it. And we've released a couple of versions. I like kind of one of the reasons it took us so long to come up with a second version is we were kind of talking a little bit about how we could make it better, and we came up with some pretty good ideas, I thought. So, as part of what's new, if you have the Victory 1 but you haven't gotten 2, we added the high profitability buy setups, the suggested take profit areas. We added all those multiple time frame views so they can give you the weekly and the daily all at the same time. That market dashboard is cool, especially on days today like today where the market might be selling off a little bit. You kind of want to see what the sectors are doing. It'll break that down for you. You've got the, of course, you've got scanning. I love scanning. I love the ability to go in and just kind of filter through, get rid of all of the noise, and just focus on the opportunities instead of all of the other stuff that exists in the market that's just a distraction. It does have the expert advisor. It showed how it can kind of tell you where your stop losses are. It can tell you where you should kind of what your options you could consider with any given trade. Tell you about that SOAP indicator and kind of how that works. All that stuff is built into the exploration. And we added quite a few things in kind of a new version where we had some user feedback. We have a broad market view for India and Australia now, so you can actually take a look at the markets in those areas and see what's going on from a broad market perspective. We added templates for the 1 minute and the hourly charts. And there you go. So here's this. The thing I like about this, it's a little bit different now. I should update the screenshot because it either shows green, red, or yellow, like Vince was showing you. But you can, this one by default is showing the daily and the weekly and the monthly. But you can throw this into any time frame, and it'll tell you kind of like if you want to see just what's going on today, you can put this on an hourly basis. It'll go tell you how the indicators and how the indices and how the sectors are doing on an hourly basis. Very, very easily. In fact, you just click on this M, change it, and it's going to go down to that lower time frame. So, and then of course these trend ribbons, those are brand new as part of it. We'd already talked about these. Anyway, a fantastic add-on. There's a reason it's been so popular, and it's really, really simple. Vince talked about all the scanning you can do. I've already talked about the scanning that you can do. So here's the expert advisor. Here's the tester. We're going to go ahead and kind of give this to you. One of the things that we kind of talked about is kind of giving including Vince's other systems as part of the installation package. So we're going to do that. We're going to include the winning momentum strategy. It was a very popular methodology that we were using before Veracity. Then we had Veracity. We were using that for a number of years. Very, very popular. We're going to include that as well. These are both complete systems that Vince has designed. They include the experts and the explorations, all in and of themselves. So you'll get those. Vince talked about the Trading Winds membership, and we weren't talking about that today. I had a really extensive call with Vince, but one of the things that Vince said that didn't surprise me is he's like, a lot of the people that sign up for the Trading Winds membership through Metastock come to the sessions. They really enjoy them. They're always there. They're always asking questions. And to me, that didn't surprise me much. What surprised me, Vince says, really good. I'm surprised that everybody doesn't go to all of the sessions. But as part of this Trading Winds membership, you're going to get daily trading ideas. You're going to get live weekly training sessions. You'll get on-demand technical analysis videos, option trading ideas. All that stuff is just included. And if you go to tradingwinds.com to sign up, it's about $97 a month. It's about $1,164 a year, or exactly $1,164 a year. And as part of your Trading Winds purchase, we're going to include that as well. So not only are we giving you the methodologies, the systems, we're going to give you the winning momentum system. We're going to give you the Veracity system. We're also going to give you a year of the Trading Winds membership. So all of that's going to be included. We sat down and we did a boot camp just designed to help you get started. That's available instantly, and we're just going to include it as part of the purchase. So just to recap, Vora Victory is normally $19.97. That Veracity, a completely other built-in methodology, a module, is $19.97. Winning Momentum Strategy was $4.99. The Pro membership would be $11.64. If you bought all this together, it would be $56.57, $5,657. And it would be well worth it at that price. But what we're going to do as part of the special that we're running on this right now is you can buy all of that for $9.97. And that's not all either. We're going to give you a money back guarantee. So if you go ahead and go through this, if you get it, you go through the boot camp, you get Victory and the membership to Trading Winds and start going to the classes, and you get Veracity and Winning Momentum Strategy. And if after all of that, you decide it's not helpful for you, or if you decide it's not going to help you get the better trades that you're looking for, we'll give you a full refund. And the other thing is if you don't have Metastock already, Metastock, just to kind of give you, is the engine that runs Victory. It's a software program that's been rated #1 in its price category for 32 years in a row. We'll throw that in as a trial as well if you haven't tried it before. So the cost here, the investment that you'll pay is $9.97. The risk that you have if it doesn't help you, you get a full refund. And you can try it out there. So I'd recommend that you try it. I'd love a trade where you don't find these in the market, where there's a very, very high reward, very, very little risk. Give us a call, 800-882-3040. You can also order online at metastock.com/TW-victory. You can also get in touch with us at metastock.com/salespchat. Give this a go, like I said, if it's not helpful for you. We want you, of course, to keep it. It's been a very, very well adopted add-on. People really, really like it. Give it a go. Metastock.com/TW-victory. Or call us, 800-882-3040. If you have any questions, if you want us to send you charts, if you want to see some other stuff around it, let us know. You can always chat with us as well at metastock.com/salespchat. Again, big thank you to Vince for kind of helping us out today, kind of showing it off. Very good job. I'm just looking to see. I don't think I missed any questions. If I did, give us a call. We'd love to help you answer any questions that you have. Thanks for coming here. If you enjoyed the session, don't forget to like, subscribe. It helps a great deal, and I appreciate it. Thanks for coming. Give this a go. Stay healthy. Stay well. I'll see you at the next one.